All right, guys. So there are so many people that, really got into cryptocurrency, aka virtual currency last year in 2020. I mean, Bitcoin now has a market capitalization of over $1 trillion. And each Bitcoin is trading well over $50,000 per coin right now. So there are a lot of people that now need to file their taxes. They need to report their trades. And yes, the IRS has definitely come out with new guidance around this over the past year or two as it's becoming more emerging, as it's becoming more mainstream. And so what you guys want to do, you want to equip yourself with this knowledge so that you can assist clients that are going to be coming your way now and going forward over the next few years. Because guess what? Cryptocurrency, virtual currency is not going away. More and more banks are getting into cryptocurrency and virtual currency, and you're going to see more and more payment processors accepting cryptocurrency as a form of payment. Maybe even Amazon one day will accept that as a form of payment. So as it becomes more mainstream, you want to stay ready so you don't have to get ready. Okay. So let's just quickly go over how you're actually going to learn this. Welcome if you are new to me. My name is Krista Tyus. I teach tax and accounting professionals how to grow multiple six-figure virtual firms with social media so that they can work virtually, work from home, and live the life of their dreams. So if you want some resources about how we can potentially work together, check out my program, Tax and Accounting Client Six-Figure Accelerator. I'll be happy to send you some more information. I'll put my website below. Also, if you are new to my channel, welcome, subscribe. I come out with weekly content. And if you found this video helpful, go ahead and share it out to your friends, your family, so that they can learn as well. So what I'm going to do, because we are in partnership with certifiable.com, Certifiable, I'm really excited because they're revamping all of their courses. So right now it's only 2 courses really available and some free courses. But the virtual currency is one of the courses that has been newly revamped. And I actually want to just show you guys the course right now and actually show you one training video of it so you can see the type of content and also learn virtual currency while you're here. So let's go ahead and play one of the very first videos within this virtual currency course.
So welcome back. So let's take a few minutes and review what cryptocurrency is. Cryptocurrency, virtual currency, again, you can go by both names. A little bit of the history, and then we'll get into more of the details from a tax standpoint in further presentations. So what is cryptocurrency or virtual currency? Really, it's a decentralized virtual version of money. Okay, so this is just sort of the textbook MBA definition that you see on your screen, but in a lot of environments, an increasing number of environments, it's starting to operate more and more like real currency. You can buy things with it, you can exchange things, you can do all sorts of things. You can buy it as a currency and hope the price goes up as an investment, which is becoming an increasing sort of a very popular form of actually dealing with these kinds of things that you see on the internet, on Reddit, on Facebook, on Twitter, on all sorts of social media. So ultimately, it does operate like real currency. But from a tax standpoint, as we'll discuss over the course of our time together, it really operates more like property in terms of how we account for it and how we pay taxes on it. But ultimately, it doesn't have any legal tender status in any jurisdiction or any country. So the whole point of it is that it's decentralized. It can be used in theory all over the world, depending on who accepts it. Again, it's only like any other form of money. It's worth what people are willing to pay for it, like any other asset. So ultimately, these virtual currencies, these cryptocurrencies, often referred to in units called coins, have some sort of equivalent value in real currency, in dollars or whatever the case it is. So you spend a certain amount of dollars to buy whatever these current cryptocurrency coins represent. So one cryptocurrency, Bitcoin or Dogecoin or Ethereum coin might be worth $1 or $2 or 50 cents or 5 cents of US dollar money. Okay, and that will fluctuate any given time. There are lots of websites you can go to now. There are lots of apps you can go to now that will track the value of cryptocurrency over any given time period. A lot of broker dealers now offer some sort of way where you can go either online or through whatever app you might have with a broker dealer to go ahead and track them as well. And they'll even let you buy and sell them through the broker dealer too. So the first cryptocurrency, Bitcoin, probably the most famous of them, it's only been around for a little over a decade. But as some testament to how popular these have become, as of January 2021, there are now over 4,000 forms of cryptocurrencies in the marketplace. There is a dizzying variety. Some are flourishing, some are floundering, some are doing okay, some are getting by. Again, their performance is all over the map, in many ways given to really depending on how accepted they are. How many merchants will accept those? Some cryptocurrencies that have even branched out and created credit cards and actual physical ways to use them. So ultimately, cryptocurrency is obtained. You can either buy it on an exchange, or you can go into something called mining, which we'll talk about in a little bit. But ultimately, the way these are secure is they use some sort of advanced computer technology, some advanced computer programming, cryptography, really. Okay, in other words, the way they protect themselves from being hacked into is because they're very, very sophisticated in terms of how they're set up. Most of these were created by people who were big into high tech, big into coding, that kind of thing. So ultimately, any transaction that involves cryptocurrency is recorded on what's called a ledger, and that's an on-chain transaction. Okay, you've heard of perhaps chain or blockchain in relation to this kinds of industry. So ultimately, most transactions are done on-chain. Some are off-chain. Remember, these coins, these cryptocurrency, this virtual currency is not very. It was designed to avoid regulation. So things like the SEC and other governmental entities are only just now starting to come to grips with, okay, what does this mean? Is there any way we can protect people from being ripped off with these? Or is it just sort of wild, wild west and let them flourish on their own? All right, so a lot of these currencies will trade on exchanges like Deribit and others, and you can even buy futures through several large broker dealers. You can buy futures on the future price of these cryptocurrencies, again, through these broker dealers. Now, there is no specialized exchange for these. There's no monetary exchange like a currency exchange in Philadelphia. There's no CBOE, the Chicago Board of Options Exchange. There's no CTFC with the Commodities Futures Trading Commission. So there's very, very little regulation in this area yet. To some people, that's exciting. To some people, it's a little scary because it's really caveat emptor. You don't really ultimately know what you're getting into until you get into it and find out more about it. As with any of these sorts of newer types of investments, I always recommend look into it first before you get heavily involved. So as I said, cryptocurrency can be acquired in all sorts of different ways. Now, you can receive it as a payment. I know people who sell goods and services online through Etsy or eBay or other venues, even Amazon, where they will accept cryptocurrency for payment. Again, it's up to them. You can also acquire it on any one of the number of cryptocurrency exchanges. You can also acquire it by means of mining. And we will get into mining later when we talk about the cost basis of cryptocurrency, because mining involves some expenditure of money. The biggest expenditure is typically electricity. You'd be surprised. Cryptocurrency in general now is, I want to say, the 20th or 30th largest consumer of electricity on a day-to-day basis in the world. I'm talking about countries, because so much energy, so much electricity, so much computing work is now going into mining operations for Bitcoin or Ethereum or any of the other cryptocurrencies that are out there. All right. You can also receive digital currency by means of forks. And again, we'll get into that a little bit later. in terms of how you might acquire this. It's really kind of a bonus that's thrown off by an existing cryptocurrency. Now, I've talked about Bitcoin a couple of times, and Bitcoin has become the most well-known, it was the first one, the most well-known form of cryptocurrency, but it is not the only one by far. As I said, there's more than 4,000 of them now. But Bitcoin is available really now in most large economies, most large currencies. You can trade that currency in for Bitcoin. So dollars, euros, or even other virtual currencies, you can trade those in to acquire more Bitcoin if you'd like. So I said I'd mention a little something about forks. So a fork is one particular blockchain splits into two. All right, we'll talk about this in a little bit because a couple of the better known chains have gone ahead and split Bitcoin and Bitcoin Cash, Ethereum and Ethereum Classic. What happens is there's some substantial change in the new version of the currency that makes it different. So a fork occurs. In other words, you're going to get some of the new currency and some of the old currency. We'll talk about what this means, but ultimately the IRS considers this like a bonus. Okay? So basically, again, as I mentioned, this happened a couple of years ago, 2017 now, with Bitcoin and Bitcoin Cash. And ultimately, the cost basis of the new currency, when you might go to sell it or do something else with it, is going to be whatever value you received when the fork occurred. Again, we'll get more into that and the mechanics of that a little bit later on. An airdrop is that sort of marketing, sort of extra sort of coins that you might get. It's often a promotion. It's like finding a toy in a Cracker Jack box or a box of cereals. Okay, so a developing coin may decide, well, if you buy a few of our coins, we'll give you some for free. Okay, so it's really a giveaway. All right, now because it's a giveaway, there's no cost basis. So basically, whatever you received is going to be taxed as income, as ordinary income when you receive it. So you need to keep track of it. On all of these things, it's vital that you keep track of any of these movements, either acquisitions, sales, trades, etc. All right, as we explained, the paperwork, the record keeping with this is still fairly unsettled. And unless you are doing a lot of trades, as we'll talk about later, you may have to keep all of this track of this bookkeeping on your own. Okay, so be very mindful of that because the IRS is now more and more strict with people keeping track of this stuff. There's even a mechanism called staking, all right, where basically you put up your coins as collateral and then you might receive some extra payment in that same cryptocurrency. Again, any reward coins that you get for this mechanism is taxed to you as ordinary income. So, as I mentioned, mining is where you join with other people, create a pool, and literally kind of go mining virtually for these kinds of currencies. Okay, so that's what mining entails. Now, there's going to be electricity costs and perhaps other costs, maybe some other costs of acquisition, some other technical costs that might go into the cost basis of acquiring these coins. Okay, this form of cryptocurrency. You've got to keep track of that on your own. It's vital that you do, as I said before. All right. Ultimately, you're gonna have to declare ordinary income to the extent that what you received is more than your cost of mining. Okay, that's going to be ordinary income to you. Now, we're going to go through some examples later on in this course, so you understand more precisely what we mean in numbers. All right, but what you receive in terms of whatever the coins you get, to the extent that it's more than what you spent to acquire it, that difference is going to be taxed to you as ordinary income at your ordinary income rate. All right, and as I mentioned earlier, you want to tell the IRS you're doing this as a business. Because if you're saying you're doing it for fun or you're doing it as a hobby, that really limits what you can take as a tax write-off in terms of your expenses. Okay, so you really want to consider this side business, a gig, whatever you want to call it. You want to treat it for IRS, for tax paying purposes, as a business. Now, as I said, there are thousands of types of cryptocurrency these days. Okay, the classic one is Bitcoin Cash and Bitcoin. Again, Bitcoin and Bitcoin Cash split in 2017 as a part of that fork that I explained earlier. Again, but there are thousands and thousands now of different kinds of cryptocurrency. Ethereum is probably the second most well-known and the second oldest form of cryptocurrency. And again, that also underwent a split where we have Ethereum and Ethereum Classic. Again, every time we have one of these splits, you have two separate currencies, okay, with their own rules and regulations about how they work, who will accept them, what they can be used for, etc. All right. Litecoin is considered one of the altcoin digital currencies. There are other names. These are kinds of spin-offs from Bitcoin. Again, once you get deep into the woods on this terminology, it can get a little confusing. So you want to be very careful when you're dealing with any of these. What does it entail? How do I acquire it? How do I sell it? Find that out ahead of time. All right. I have lots of friends who are trying to talk to me into cryptocurrency all the time. And I say, not until I do my research. Okay. I don't care that it's going to the moon, as they keep saying. I want to know what kind of rocket ship I'm jumping into before I take that moonshot. All right. We've got all sorts of weird, funky, fun names. Ripple, I think, is a fun one. Again, the value token here, each one of the tokens has typically a 3-digit code. This one happens to be XRP. Okay, Zcash, another variation formed in 2016. Stellar Lumens has tended to target banks and individuals in developing countries. Some of these are targeting a niche market in terms of their clientele. Some are not. Again, it depends on the business model for that particular cryptocurrency. Like Dogcoin, believe it or not, there's something called Dogcoin, which, yes, Snoop Dogg is bought into it. Elon Musk has famously, Gene Simmons from Kiss. It was meant to be fun, and now it's got a value. Okay, again, what are these coins worth? Whatever people are willing to pay for them. So you will see, and we have seen in the last few years, especially with Bitcoin, because it's the first one and the one that's got the biggest market value in the billions right now in terms of its market capitalization. We had Bitcoin a few years ago go up to 20,000, then down to in the single digit thousands, and now it's up to 30, 40,000. It is subject to some pretty severe fluctuation. Cardano was really kind of an offshoot by programmers that had been working on Bitcoin, but then they decided, let's go take all the stuff that we've learned through peer review articles and experimentation, and let's form our own other things. So they did, called Cardano. As I said, there are thousands of cryptocurrencies out there. Some are worth fractions of a penny. Bitcoin is worth in the tens of thousands of dollars right now. Okay, the valuation is all over the map, and so are the fluctuations in all of these. So as always, at the end of each of these training sessions, if you want to drop off any questions, let us know, or you can email us, and we'll see you in the next session.
All right, guys, so that was the first video within the cryptocurrency virtual currency course. And as you see, there are tons of other videos in this course, just like the one that I showed you. And right now, Certifiable is running an amazing special on this just for $19. So go ahead and grab this entire course so you can learn, really understand, because this market is huge, right? It's only going to grow, and you will, if you are a professional tax and accounting person, you will encounter people that have invested in some form of cryptocurrency. And so you want to prepare yourself. You want to know exactly what it is you need to do, how you need to be advising upon, how they need to treat, their bookkeeping and their basis and all the nuances that's going to go along with cryptocurrency and virtual currency. Okay. So I'm going to put the link below to check out this virtual currency course. Grab it before the price goes up. It will be going back up to $97 very soon, because as you see with this, even the first video was tons of gems were being dropped, right? So this course is a game changer for you. If you guys have any questions, feel free to reach out to me. You can drop your questions below and let me know how this helped you. Just this one video, let me know how it helped you if you have a greater understanding around cryptocurrency and the nuances around taxation of it. All right, guys, I'll see you in the next training video. Bye.